Today we are looking at the YieldMax products, at least some of them, to do a bit of a comparison against QQQI and BTCI from Neos. I want to elaborate and expand on the dangers of these YieldMax products, what's going to happen in the future, and looking at their NAV erosion effectively. Let's look into it. All right, people. Let's start by looking at Misty and ULTY. These are kind of like the most popular YieldMax products today. Let's look at Misty and ULTY's price performance over the past year, over the year to date period. Let's start with Misty. Okay. So Misty year to date has depreciated 32%. Okay, 32%. Now let's look at ULTY. Okay. ULTY has depreciated 34%. Let's show it to you this way. ULTY depreciated 34%. I know they did do a change to, I believe, weekly dividends potentially and structured their assets a bit differently. We can read into that later, but nevertheless, their NAV, their net asset value, which is effectively the price, right? The asset price value of the ETF. It's continued to depreciate even after this change, right? Before they were sitting at around $6, $6.10. Now they've hit, a pretty much a yearly low, and I think an all-time low with this ETF, with about $5.90 for this ETF. And I know that these have super high dividend payouts, and so one might think, okay, cool, like I'm just going to drip this dividend, reinvest this, and run with it. But I want to show you the negative impact on what happens when we have what's called NAV decay, when you have a net asset value that continues to decline, right? In my eyes, with YieldMax, they're just paying you back what you invested over a 2 year period to a degree, and hoping for maybe a bit of high value that can yield appreciation potentially. I'm not quite sure. It's a unique strategy that I'm not in love with. Um, let's compare this to QQQI and BTCI for a second from a price standpoint. Okay. Let's go over to Seeking Alpha here. We're gonna do a comparison. So year to date, BTCI and QQQI, BTCI has appreciated 7%, QQQI 2%, ULTY, as we said, negative 34%, Misty, negative 32%. And that is on price. That's on price. Now let's switch over to the total return. The total return does tell a different story. Okay. It does show that, ULTY and Misty still yield a decent total return with 14% and for 20%. And that's fine and all. But there's a narrative to what will happen. There's a story of what will happen when we nav erode. Okay. And I want to break that down for you right now. So let's say Misty, or rather ULT's share price is $6 and you have $1,000, 1,000 shares rather. Okay. $6. You have $6,000 of value in this with this asset, and the yield is 88%. Let me change this. 88%. Okay. Your payout for the year, your annual payout is going to be about $5,200. Okay. Now assume basic math. Assume that the NAV continues to decay year two, and the share price goes to $5.50. Okay. You still have the same share quantity because you haven't been dripping. You've been taking it out and using those funds in other places. Okay. Now your value of that asset, okay, has come down to 5,500. You're in a share loss. You're in a capital loss position, and it's going to maintain its same yield likely, and you're going to see a weaker dividend payout. Okay, and then the next year, the share price will come down. So now you're down 1,000 from the initial investment, and the yield comes down more, and it continues to come down and come down and come down and come down and come down until you have no value left, and maybe some payouts that you've you've derived. And yes, one can say, I have still dividend payouts, and that's fine. And I did what I needed to do. I already met my investment. But we're long-term investors. We don't want to have to play this game of like, NAV eroding and dealing with my capital loss, and really you'll have a worthless investment in the end of it as this model continues to unfold. Okay. Compare that to a QQQI or a BTCI where your total returns are growing and you have a stable, if not growing NAV. Let's look at that growing NAV again. Price return. 7% gain on BTCI year to date. Okay. BTCI for in the annual period has grown 28%. QQQI 6%. ULTY negative 46% and Misty negative 23%. You tack on other things. Let's tack on the MER. Where's the MER? I think they're hiding it for me. The MER for Misty, I believe, is upwards of 1%. What is the MER? Let's find out for ULTY. Net expense ratio for ULTY. So it's 1.3%. 1.3. It's crazy high for this type of asset. Crazy high. I would never pay any more than 1% for anything as it relates to ETFs. Cannot pay more than 1%. I know they have a really high dividend payout, but again, we saw the story there. It can be interesting in the short term, but I think people are playing this short-term game. But you're going to see a significant capital gain loss, significant. And I was, underplaying it, but you're going to see a strong capital gain loss every year, and a weaker dividend payout every single year. So the math ain't mathin' for me. I'd much rather have a stable, if not growing NAV, as well as a strong dividend payout. It's much healthier for the asset manager to manage something like this. And I know that Neos, those guys, they're talking about long term. When they talk about their investment structure, it's not just for short-term gains and short-term wins, and they're not just paying out, return on capital. While they might structure that by the way of the tax, it's a tax advantage thing. They are talking about these assets as a long-term play. So I'd much rather a QQQI, a JEPQ, the Goldman Sachs covered call, the BTCI covered call, as opposed to YieldMax, which I believe is very scary and very dangerous. Okay, guys, what do you guys think? Are you invested in YieldMax? Are you invested in BTCI and Neos? Where do you sit? Where is your head at? Are you long-term investors? Are you more using YieldMax for short-term gains? Let me know in the comments below. Also, I run a Patreon. If you want financial coaching on a monthly basis, sign on up. Outside of that, guys, all the best. Cheers.